And first off, what are the key things that contributed to this 17% increase in your PBT?
I think the key elements which contributed to the increase was the increase in turnover. Last year we had commissioned a new cement plant in Athi River. That plant is operating to full capacity. Our cement volumes have increased significantly, and this has contributed to the increase in our overall profitability, including the profit after tax.
All right, turnover up 61%. I'm sure overall you must be very happy with the results, but a lot can be done.
Yes, we are on budget. We had there are two things which we are significantly happy about. One is that the company continues to progress on budget, and the second thing is that we continue to increase our presence in the East African region, in all the markets in the East African region, and the acceptance of our products continues to increase, and so does the market share.
All right, the sales are up to 2.7 billion shillings. Tell me about the competitive environment in Kenya, especially noting your associate and competitor Bamburi Cement and how you play into this market.
Well, though the cement market in Kenya is increasing, it is growing by an average of about 10% year on year. So are the number of manufacturers of cement in Kenya. Last year we had a manufacturer who came in. Previous to that, we had a manufacturer who came in, and this year we just have another cement company which has come in. Now, the market is growing, but so is the competition, and so the entire competitive landscape is becoming more and more tougher as we go ahead. Athi River Mining has fortunately done well. We have continued to increase market share in a very competitive market. Some of the bigger players, like you mentioned, their market share has decreased, though their volumes may not have decreased due to the increased competition in the country.
All right, you're changing name also to ARM Cement, which will be passed off at an annual general meeting. Why is this necessary?
Well, I think, we have changed significantly over the years. 10 years ago, 50% of our business was coming from cement and 50% was coming from non-cement business. Today, 80% of our turnover comes from the cement business, and the non-cement business is just about 20% of the business. Increasingly, we have become a cement company. We are recognized as a cement company. The investors and the shareholders look at us as a cement company. So we thought it was appropriate for the name to reflect the business, the core business of the company, which is now cement.
All right. You don't just play in Kenya, you play in Kigali, in Rwanda, and in Tanzania as well. How are those regional markets doing?
The regional markets are growing. They are growing faster than Kenya. Tanzania, for example, is growing at an average rate of 14 to 15%. Rwanda is growing exponentially. Rwanda is also growing close to 18 to 20% year on year. Now, these markets give us an opportunity to increase our market share and increase our volumes. Rwanda, for example, this year has contributed about 5% of our total turnover in cement. Despite being a small market, it is making a significant contribution to our businesses. We expect going forward that all the regional markets will continue to help us grow our volume, help us grow our market presence, and help us grow our business.
But something that affects your competitiveness is obviously the cost of energy, which in Kenya is both unreliable and expensive. What does the government say about this when manufacturers raise these issues?
Well, we have been taking this up with the government at several levels. The government, of course, is putting up several plans. They have a Vision 2030 by which they would increase their hydro capacity and also increase the geothermal capacity, which should make the energy costs competitive in our country.
Right.
At the present moment, however, the energy costs are high. We are largely dependent on hydro, and if the rains are not good, then we change over to thermal power generation, which is very expensive. Therefore, the basket of generating capacities which the country has is still not very favorable. But with the investments which are going on in alternative sources of energy, for example, geothermal, solar, wind power, if all these projects come across, then in another five-year landscape, we should see our energy costs becoming competitive and comparable to the other countries in the world.
All right, very quickly, in the last few seconds, just tell us what is your outlook for the entire year for Athi River Mining?
Well, we expect the business, we have a very positive outlook. We expect the business to grow as it has grown in the first quarter. We expect the business environment to improve as we go ahead. not only in Kenya but in all the markets in which we are operating. So we are very positive about how the year will turn out, and we expect it to be on budgets, and we'll perform as per our budgets and maybe even better.
All right. Tell me about the future for this industry in terms of what kind of market share projections do you have?
Well, we at the present moment have something like 15% market share. We have a market share which is in line with our capacity.
Right.
Going forward, we expect to maintain our market share, if not grow it. And growth will come out of the new capacities. At the present moment, all our divisions are operating to full capacity. So we probably would have to put in new capacity if we have to increase market shares. Strategically, we are placed to increase our capacities. We have the resources to increase our capacity. So medium term, we expect to maintain our market share. Long term, we hope to improve our market share.
All right, we'll leave it there. Surendra Bhatia, Deputy Managing Director at Athi River Cement, one of Kenya's largest cement manufacturers. Thanks for joining us.